In this video, I'll share with you 11 stocks that I invested in the beginning of March 2024. I'll give you some reasons on why I invested in them, the current prices of the stocks, and if I'm making or losing money on my investment so far. And if it's your first time on my channel, I work as a finance manager at one of the top tech companies with an MBA in finance and a CPA designation. Each month, I'm investing $2,000 of my own money into different stocks. $1,000 gets invested into dividend stocks and another $1,000 into the stocks that I think are currently undervalued. Without any further ado, let's go over 11 stocks one by one that I ended up buying in March 2024, out of which 5 stocks were dividend stocks and 6 stocks that I think were undervalued. Stock number 1, Avalon Bay Communities. Avalon Bay is a real estate company focused on developing, redeveloping, acquiring, and managing multifamily apartment communities in expansive market in the United States. I bought one share of the Avalon Bay stock at $175.73. At the time of this video, the value of the stock increased to $183.82. This means I'm up by $8.09 so far, or 4.6% return on my investment. Avalon Bay also has a dividend yield of 3.8%, which means that they'll be paying me $3.80 for every $100 I have invested in their stocks. I invested in Avalon Bay because we have one of their apartment complexes in our neighborhood. Most of their renters seem to be happy with their experiences with the company so far, and their building appears to be fully occupied. Also, the company is growing their portfolio of apartments each year by either developing new buildings or buying existing ones. These reasons made me want to become an investor in Avalon Bay. Stock number 2, Verizon. Verizon is a telecommunications company based in the US, offering a range of services including wireless communication, internet, and television. I bought 6 shares of the Verizon stock at $40.02 for a total investment of $240.12. At the time of this video, Verizon is trading at $39.52, which means I'm $3 down, or negative 1.2% return. Verizon has a dividend yield of 6.6%, which means that they'll be paying me more than $6 a year for every $100 I have invested in their stock. I invested in Verizon because I use their products and services myself. As long as I remain to be a satisfied customer of the company, that makes me more willing to be an investor in it as well. I'm not really concerned about the small decrease in their stock price so far, as it's very normal for the stock price to go up or down in the short term. Stock number 3, UPS. UPS is a global logistics and package delivery company, which is known by everyone for their brown delivery trucks and an efficient shipping network. I bought one share of the UPS stock at $146.98. At the time of this video, the value of the stock increased to $153.01. This means that I made $6.03 so far, or 4.1% return on my investment. UPS also has a dividend yield of 4.4%, which means that they'll be paying me $4.40 for every $100 I have in their stock. Based on my analysis and research, I feel like UPS stock has some opportunity to grow in value over the long term. The management of the company is really trying to focus now on being able to cut costs, increase automation, and boost their margins. All of these efforts should be able to bring some positive results to the UPS stock over the long term. Stock number 4, Pfizer. Pfizer is a global pharma company that is renowned for its research, development, manufacturing, and marketing of prescription medications and consumer healthcare products. I bought 10 shares of the Pfizer stock at $26.71 with a total investment of $267.10. At the time of this video, the Pfizer stock is now trading at $27.97. This means that I made $12.60, or a 4.7% return on my investment. Pfizer also has a strong dividend yield of 6.3%, which means that they'll be paying me $6.30 for every $100 invested in their stock. When I was analyzing the stock, it looked like a good opportunity for me to get in at the time because the stock has been trading at one of its lowest prices in the last 10 years. There will always be existing and new illnesses, and people will always need their medications, so it was a good opportunity for me to get invested in Pfizer at that price, and also enjoys 6% dividends annually. Stock number 5, PepsiCo. PepsiCo is a multinational food and beverage corporation which owns some of the most iconic brands such as Pepsi, Lay's, Gatorade, Doritos, and Cheetos. I bought one share of the PepsiCo stock at $163.80. At the time of this video, the value of the stock increased to $165.25. This means I'm up by $1.45 or 0.9% return. PepsiCo has a dividend yield of 3%, which means that they'll be paying me $3 for every $100 I have invested in their stock. There were a couple of different reasons for why I decided to invest in PepsiCo. They're having a strong trend of continued revenue growth in the recent years. Also, PepsiCo owns some of my most favorite products in their portfolio, which I know that hundreds of millions of other people also enjoy. PepsiCo stock looks to me like something safe I can invest in while also enjoying 3% dividend payments each year. So these were 5 dividend stocks that I invested in March 2024. Now let's discuss the other 6 stocks that I also bought in March 2024, which I thought were undervalued, and I'm keeping them in my separate portfolio. Since I'm buying these stocks while most of their prices are declining, I'm not really expecting them to increase in short term. Instead, I'm investing in them for their long-term potential. So stock number 6, PayPal. PayPal is an online payment system that allows you to securely send and receive money around the world. I bought 2 shares of the PayPal stocks at $60.92 for a total investment of $121.85. At the time of this video, the PayPal stock is trading at $62.70, which means that I made $3.55 so far, or 2.9% return on my investment. There were a couple of different reasons for why I invested in PayPal stock. First, the company's revenues have been rising continuously each year, which is one of the most important indicators for me about the company's growth potential. Secondly, I've used PayPal myself as a customer for both my personal and business needs for over a decade. I like to invest in companies that I use and understand myself. And lastly, the price of the PayPal stock at the time of my purchase just seemed like a good value to me, especially as it's so far off compared to its peak couple of years ago. Stock number 7, Shopify. Shopify is an e-commerce platform that allows individuals and businesses to create and run online businesses. Most online stores you see from large and small businesses are actually powered by Shopify. I bought 2 shares of the Shopify stock at $77.19 per share, with a total investment of $154.38. At the time of this video, the price of the Shopify stock decreased, but not by much, with only a 0.1% loss on my investment. So why did I invest in Shopify? Shopify has been dominating its competitors in the business of opening and operating online stores. There's no other company that's as good as Shopify now when it comes to their tools and services, so it's almost like a monopoly that Shopify is operating under. As more and more businesses are moving online each year, Shopify is in a great position to capture majority of those potential customers and sign them up for expensive subscription services. So overall, this level of market dominance in a growing industry is what made me want to become an investor in Shopify in March. Stock number 8, Boeing. Boeing is one of the world's largest aerospace companies, known for designing, manufacturing, and selling commercial airplanes, defense products, and space technologies. I bought 1 share of the Boeing stock at $203.59. At the time of this video, the Boeing stock is trading at only $180.15. This means that I'm losing more than $23 or 11.5% loss on my investment so far. Boeing has had a lot of negative news coverage in the last couple of weeks, which has really affected the price of their stock. But I'm still okay holding Boeing as a long-term investment because they're a very strong player in the aviation industry, and the only competitor they have there being Airbus. Also, they're a very strong player in the military industry as well. So maybe I'll also consider investing in Boeing stock as part of my April investments, so that the average price that I own the stock becomes lower. Stock number 9, Chewy. Chewy is an online retailer specializing in pet products, offering a wide range of items including food, toys, medications, and accessories for various animals. I bought 12 shares of the Chewy stock at $17.64, with a total investment of $211.68. At the time of this video, the price of the Chewy stock is now $17.44, which means that I'm down on my investment by $2.40 or negative 1.1%. When I was investing in the Chewy stock, I noticed that their 52-week high price was around $42 and the 52-week low price was around $15. This meant that I was buying the Chewy stock at quite a bargain. Chewy as a company has one of the best customer services that I've ever experienced. And as someone who uses Chewy for my pet purchases needs, I'm willing to become a long-term investor in their stock despite their short-term price declines. Stock number 10, Apple. Apple is a global technology company known for some of its most iconic products, including the iPhone, iPad, Mac computers, Apple Watch, and AirPods. I bought one share of the Apple stock at $179.67. At the time of this video, the Apple stock is trading at $172.69. So I'm losing $6.98 on my stock so far, or negative 3.9% loss on my investment. I'm not really concerned about this short-term stock price decline because Apple is a very successful company that continues to grow each year. What I like about Apple is that they don't rely on just a single product. They have a wide range of products that can all be considered as successful on their own. It's never a good idea to invest in single product companies, which Apple is definitely not one of them. Stock number 11, Disney. Disney is a global entertainment company renowned for its iconic films, theme parks, television networks, and merchandise. I bought one share of the Disney stock at $111.47. At the time of this video, the value of the Disney stock is now at $111.75, which means that I made 28 cents so far, or 0.3% return. Despite the many issues that Disney has been facing recently, I think I got the stock at a very good price to hold as a long-term investment. I think the company has a lot of opportunities to be able to bounce back, as their stock has been trading at around $200 a few years ago. So overall, this table here summarizes all my investments, the current value of each stock, and how much profit or loss I made from each company. If we combine everything, I'm down by only $4 as I invested $1,976, and the current value is $1,972. Short-term declines are completely normal, especially in this case, majority of the decline was being driven by Boeing, which we know has been experiencing a lot of negative publicity in the last couple of weeks. I'll be posting another update video towards the end of the month, and will also invest additional $2,000 early in April as part of my new investments. I hope you found this video helpful. Thank you for watching, and I'll see you in the next one.